Hi everyone, this is Dr. Pradeep Reddy, Associate Professor, Sage University Bhopal. In this video, I would like to bring to you about accounting cycle and what is journal and what is ledger and what is the difference between journal and ledger. First of all, let us see what is accounting cycle. So basically, every business, there were transactions, and since human memory cannot remember all the transactions, we will be recording these transactions in a book, and hence it is called as journal entries. So journalizing the transactions and recording them according to chronological order is called journalizing, or simply called as journal. So wherein after writing journal entries, these journal entries are posted into ledger accounts called as individual accounts. So what is the use of ledger accounts is, in order to know the balance of the account, we have to prepare ledger accounts. So after preparing ledger accounts and finding out the balances from these accounts, these balances are to be posted into trial balance. So trial balance is a record of all the balances that are being done in 1 year. And through trial balance, it is easy for us to prepare trading and profit and loss account, wherein we can know the profit or loss of the business, and hence we can prepare balance sheet. So balance sheets are prepared every year, and again the cycle starts from the journal entries. And now let us see what is journal. So journal is a book of original or prime entry, as business transactions are recorded at the first instance. So transactions are recorded in order in which they occur, that is in chronological order, and journal is called as the basic book of accounting, because in every business we know that there are transactions, and journal is having that much importance because it is the original book of entry and the prime entry, because for the first time where the transactions are being born, they are recorded in the journal entries. And as business transactions are recorded at the first instance, and hence they are to be recorded in chronological order. So, and hence it is called as the basic book of accounting. And the process of entering or recording the transaction in the journal is called journalizing. So what is journalizing? The process of entering or recording the transactions in the journal is called journalizing. And it is a record of each transaction in the journal is called journal entry. So when we record each and every transactions according to the pro forma that is being framed, then it is called as journal entry. Now let us see the pro forma of journal. And this is the pro forma of journal, and what it includes date, particulars, LF means ledger folio, and debit and credit. So as usually, the date includes on which day the transaction has been taken place in a month, and the particulars will be relating to that particular transaction, and the ledger folio will be the page number upon which in the record that is being entered, and the debit and the credit amounts should be recorded purposefully. And next, let us see the rules of debit and credit. So as we know that we have personal account, real account, and nominal account, let us see what the rules of debit and credit, how they are. So in personal account, we have debit the receiver and credit the giver. And in real account, debit what comes in, credit what goes out. And in nominal account, debit all expenses and losses, credit all incomes and gains. So these are the general rules of debit and credit. And next, let us see what are the advantages of journal. So journal provides a chronological, that is a date-wise record of all business transactions at one place, and transactions recorded as and when they takes place, and chances of any transaction being unrecorded is reduced to the minimum because we will be entering the transactions in the day book as and when they occur, and facilitates preparation of ledger accounts because this is the prime book of accounts. It helps the accountant to prepare ledger accounts with this feasibility and serves as evidence in the court of law because we are recording the transactions, and transactions recorded with narration. Reason for each transaction can be ascertained because at the end of the transaction, we will be writing the narration of it. For example, cash received from Gopal, we will be writing as being cash received from Gopal. As we can know that by writing like this, we can know that we have received cash from Gopal on so and so date according to the transaction. And now we can see the limitations of journal. That is, when the number of transactions is very large, it may particularly be difficult, if not impossible, to record all the transactions through one journal because of the following reasons we have. Why it is difficult means the system of recording all the transactions in a journal requires the writing down the name of the account involved as many times the transaction occurs, because when we repeatedly write the transactions and we will be confusing with the names, because with only one name different people will be there, and it may repeatedly, if you write this transaction with only single name, it might be confused. And such a system does not provide the information on prompt basis because at sometimes accountants make bring mistakes or make write mistakes in the entries so that it might not be a prompt basis, and such a system does not facilitate the installation of any internal check system, since the journal can be handled only by one person, that is the accountant. Since it is not handled by many people and checks will or not happened, if there is a chances of fraud or there may be chances of rewriting the entries. So these are the limitations. And now let us see the ledger. So what is ledger is, it is the book of secondary entry, and transactions recorded in the journal are finally carried to the ledger accounts. So it contains all the accounts of the business, whether real, personal, or nominal, irrespective of the type of the account, we will be recording all the transactions. And this is the format of ledger, that is date, particulars, journal folio, amount, and date, particulars, journal folio, and amount. You can see on both the sides, on the left hand side we have debit and on the right hand side we have credit. So these are the basic principles that we have to follow when we are writing ledger accounts. So that is date, particulars, journal folio, if it is an amount, and date, particulars, journal folio, and amount. So both on debit and credit sides, we have to make the entries, and according to the type of the account on the journal entry, we have to post them here. And let us see the distinction between journal and ledger. The first difference, that is the basis of difference, is nature of book. As we know that journal is the book of prime entry because it is the first book that we are being entry in the first time, and ledger is the book of secondary entry. After writing entries in the journal book, it helps the journal will helps the accountant to take these transactions and post them into ledger accounts. And on the basis of preparation, journal is prepared on the basis of source documents by seeing the bills, vouchers, and then we will be writing the entry, and ledger is prepared on the basis of journal. Once the journal is over, the ledger takes its place. And with relating to the object, journal, with relating to journal, it is prepared to record all transactions in chronological order, because on chronological order means date wise. So whereas in ledger, it is prepared to know the net effect of various transactions affecting a particular account. That is, if it is a cash account, we will be coming to know what is the amount of cash balance that is there at the end of the month. So this is the importance of ledger. And when balancing comes in, journal is not balanced because it's an entry only. And whereas ledger, all ledger accounts are balanced in order to know where how much balance we have to receive or how much balance we have to pay. And with relating to the narration, narration is written for each entry and no narration is given in ledger accounts. So these are the basic differences between journal and ledger. So with this, we'll be coming to the end of the video, and I hope everyone have understood better, or else if I will be repeating once again that the basic differences between journal and ledger is journal is the prime book of in primary entry and ledger is the second book of secondary entry, and journal is prepared on the basis of source documents and ledger is prepared on the basis of journal, and journal is prepared to record all transactions in chronological order, and ledger is prepared to know the net effect of various transactions. And journal is not balanced and ledger is accounts are balanced, and narration is written in journal and no narration is given in ledger. I hope everyone would have understood best of the knowledge, and bye bye everyone. Thank you everyone.